Let's move on to energy. The energy markets, that is. WTI crude falling further below the $80 level as macro worries on interest rates and a proposed cap on Russian exports offset a big OPEC plus oil supply cut. RBC Capital Markets Global Head of Commodity Strategy, Helima Croft, joins us now. Helima, great to have you with us.
Thank you for having me on.
You know, what's interesting is we've seen this big move lower in oil, and we haven't gotten China coming back online, and we're seeing those COVID restrictions ease before our very eyes. So I'm wondering how you think all this shakes out.
I mean, I think today was clearly just a macro story for oil that it got caught up in. I mean, clearly there are concerns about a rate hiking, for perpetuity. But the big story on the demand side to pay attention to is China. I mean, if we were to get significant lifting of COVID restrictions, that would be a tailwind for oil. I mean, Chinese demand has been so abysmal, and oil has actually held up given the weakness in the key market for oil. So if we had any major rollback in COVID restrictions, that would be a catalyst to move higher, obviously, for the oil market.
Helima, it's Karen. Do you know how much of China's oil is from Russia versus elsewhere? And so will that dynamic be a buffer if they come back online?
I mean, this is the really important story when we think about the price caps. And today's big news was the launch of the EU's sixth package of sanctions, the embargo of seaborne oil into Europe, and the price cap to try to enable those barrels to move to Asia. And so the price cap is essentially saying at $60, Western service providers, insurers, shippers, you can move those barrels to markets like China, like India. But if you don't pay at the cap, good luck with getting any Western services. So you're going to have to rely on Russia's shadow fleet, Russian insurance. And so the question is going forward is, will big markets for Russian crude, India, China, continue to absorb as many barrels and actually take the barrels that are no longer going into Europe? So this is the key thing everyone is watching right now.
Hey, Helima, Jeff Mills here. Just another question on the supply situation. Say it remains fairly robust. Barrels don't come off the market to the extent that maybe some people fear. Obviously going into an economic slowdown there, so that's an impact on the demand side. Do you see some sort of floor in the price of oil? And if so, maybe where would that be?
I mean, this is an interesting thing to pay attention to. I'm in Washington right now. The Biden administration has signaled that they will start buying back for the SPR when WTI is consistently, around $70. Also, you have to think about OPEC. OPEC decided to take a pass on further output action this weekend, sticking with their 2 million barrel a day production cut. But if we were to move materially lower because of demand concerns, again, driven by, Fed rate hike concerns, you could potentially see OPEC come back into the market. But I would also caution against believing that we're necessarily done with Russian export losses. This is just day one of the sanctions. The Russians have said they're not going to sell to any customer that abides by the cap. And right now you're starting to see a backlog of ships out around Turkey, as Turkish authorities are saying they are checking for your insurance before they let you through these strategic waterways. So we do not know yet how the whole Russian supply picture is going to pan out, given we're just in day one of the most significant sanctions on Russian oil that's been imposed since the start of the war.
At what day, Helima, are you going to say we know the impact now?
I mean, right now we have a situation where Europe basically has till around mid-January to take the cargoes that were on the water from Russia. So if your ship left on December 4, you can still sail into Europe. But the question is, 1 month out, what is the picture going to look like? And again, if I leave you with nothing, pay attention to what's happening with Turkey. You could have a situation where a number of shippers, insurance firms, trading houses are trying to parse this new sanctions legislation and are not quite sure if they can do business with Russia. And again, Russia has shown, at least when it comes to natural gas, they will cut you off if they do not like the policies you're pursuing. So again, I would pay close attention to the Russian threats. They may not be entirely bluster.